One. What's up, everybody? This is Chris here. We are in our, sorry, let me get to, we're doing our weekly, bi-weekly, whatever we want to do, our Pollinate Lab market overviews. We're going to do some bar by bar stuff. We're coming into the end of the month, and so we want to take a look at all the different setups and get a plan going forward. We have the U.S. election, the congressional Senate and presidential, as well as mayoral and state representatives, or senators and all that. Bunch of election going on this year. Big important one. And so the markets have pretty much been sideways as we are getting into that. So I'm sharing this one out to everybody to see what we're doing in the lab. Hopefully this serves you in as a trader, that maybe develop a way to understand how to look at markets, see what the team here is all looking at. And, and we're going to have a lot of Q&A. So it'll be good. I'm going to go ahead and share my screen here. Okay, so in the Slack, if you do have any questions, feel free to drop them in the Slack. I'm sorry, not in the Slack. Well, in the Slack is fine, but in the chat. Okay, so let's go. First things first. Let me just shut off everything. Actually, let's go. Wow, that's quite a move today. Let's get to our monthlies as we're coming to the close of a month. As we're coming to the close of the month, I want to take a look at what we have going on across the board and see how these candles are forming. Interesting, we have a failed vol breakout on the monthly euro. So what that would imply is, I'm gonna go ahead and make sure everybody's muted. So what that would imply is that we have a move down to the 124 area on the euro on the monthly. And what we had been looking at prior is this level being not that level. This level right around here being a pretty commonly interesting level. Maybe a little higher. Yeah. And as you can see, when we're below it, that's interesting. And we spend a lot of time above it right now. We're currently just at it. But we do have a failed vol breakout, so we could get a move down in here, which would imply we could spend a bit more time in there. Back to the dollar. Dollar monthly, we're obviously going to have the opposite of that, right? So failed vol breakout, move up to the 96 range. It's a surprising move. People were pretty much going against the dollar quite a bit. And remember, we talked about the dollar being potentially going weaker for the long term because of having a weak dollar allows manufacturing in the United States. So nothing moves in a straight line, but we're looking at on failed vol breakout to the upside around 96, 97 area. What that would generally say is we want to be looking long in the bigger picture on the dollar. We want to be looking short on the others. Let's start with failed vol breakout on the S&P. So interesting to note on all timeframes here. I'm sorry, on all the big assets, they're all in failed vol breakouts. We have the dollar, we have the euro, we have the S&P. all in these kill that stuff. There. So we do have failed vol breakout setups. All I'm saying, it's useful to see that they're setups. Obviously, we don't have 1.5 to the midline, so it's an even easier chance that we could pull back to this area. This 3,000 mid would be 3048 level. Could be a move that we head back to. Not to say that we actually do it, but as you can see on the monthly, it is a potential. Let's have a look at the Dow. Dow's already done it. It's didn't have a failed vol breakout, but it's definitely already back to the midline, so it's going to be a lot weaker. Let me do. I know I've got a lot written on this one already. So I want to protect all these drawings. It's more of a vol breakout. We have a vol breakout that happened in pretty much, so it would have been March, April, I'm sorry, May. April would have broken out, and now we would look for the VBO2 on the NASDAQ. So very little upside movement expected anywhere. And then when we get to the mid caps, we see the underperformance. Big move off the bottom, back from March bottoms, like everything else, but never actually got to its all-time highs. Russell, same thing, never got to its all-time highs. That's a lower high, lower lows. So, you know, that more implies that we're in a downtrend on those symbols. Let's have a look at the Nikkei. Nikkei's done pretty well. It basically blasted up to those highs and has just been sitting there. Not a lot to do with it, but let's have a look at our bonds. So the 30-year also doing that vol breakout sort of scenario, starting to come back. I'm not going to go spend too much time in things that are less interesting. We still massive strength on the month, up 50% almost on the month on natty gas. That's a pretty big move. 49.1, 44. So it's, you know, that's amongst one of its biggest recent moves for sure. We didn't really get a chance to, I wanted to get in down in the $2 range, and I never was able to get the trade put together, and we're already almost up to the 3, heading to the 4. So kind of something I'm just going to skip. We have a pretty decent top. Oh, what's going on? Somebody at our house? Can't tell. We had our vol breakout pullback. So we're looking for a VBO2 next on the monthlies. Kind of want to let it go in there and see what we got. Copper's had a bunch of big moves, nothing exciting there. Corn has ripped higher. Now, soybean futures, we got ourselves a failed vol breakout now on the monthly. You know, the month is not over yet, for sure. I get it. Month's not quite over yet, but this is pretty much a failed vol breakout and a move down. A move down below here will, next month will get us filled short down to the 9,000 area. Let's have a look at Bitcoin. Let's have a look at BTC USD. I think it's on Bitstamp. It gives us the, yeah, Bitstamp gives us the most data, I think, all the way back to 2012. Turn off our not interesting or useful. I have an interesting one to point out on this one for sure, by the way. And it's on the weekly. But Bitcoin taking out the 13,880 high. I don't think we got it on Bitstamp, 13,864.89. So we still have some. This 13,880 was the high from June of 2019. So a year and a half ago or so. We had a massive run up there. We still haven't taken that out. And then if you guys, I did share the measured move targets that we're going to be looking at. Pretty much, we're looking at 37.5 to be our measured move above here. About 37,000 would be the if we start taking out these stops. Now remember, and this we're going to lead into the bar by bar stuff. But when things like this, the reason this high getting taken out is important is because you have the earliest bears who got short in 2019. The last remaining bears are going to have stops here. And so those get triggered, and that creates artificial buying because you have to buy to cover, right? To stop out of your position, you buy to cover. And then that kicks off more buying. You see the buying going through there, and it just happens. So I'm going to step away from the monthlies now. If you guys have any requests to take a look at on the monthlies, I'll go ahead and throw them in there. But I want to point one thing out really, really interesting before we do. I mean, feel free to type them in the Slack or in the chat there if you want to take a look at something. If not, I want to show you the. Oh, I missed silver. That's cool. Yeah. Let's do this one real quick, though. The 200-week moving average on Bitcoin. The 200-week moving average, even though it breached during COVID, it recovered itself, and that has held as support pretty much since 2015. The way the 200 period works is it has to have 200 periods before it can start calculating. So that's why it doesn't go back to before 2015. But it is a very interesting one to keep track of. If you ever have a period in your life where you think if you question, is it worth buying Bitcoin? And the world is ending as it did in 2019 for Bitcoin. When the world, I'm sorry, 2018, a year after the highs, it's the 200-week moving average tends to be, it seems to be something very, very important. And I'm not going to get too much in the details on why we would do that, but when everybody realizes that the 200-week moving average is important, it becomes important. That's really the act behind that. Okay, let me take a look at silver. I can look at the CFDs, or I can look at the futures. Let's go to the monthly here. Okay, so again, what do we think we have here on the monthly? I don't really, Dan, I don't have a moving average that's statistically significant. I just want to find patterns. So that's why I use the SQN as opposed to, because what I'm trying to do is find a market regime and then apply the correct trading strategy to the market regime. So as far as indicators go, indicators are by far less important than the actual price to me. Yeah, exactly. So I want to get the market regime figured out. Once and all I'm doing is just categorizing. I'm just choosing. It's arbitrarily done too. I've just you just kind of develop a methodology. It could be, you know, below the 20 week, above the 50, whatever, you know, like all you want to do, all I do with SQN and what you want to do is categorize what the characteristics are of a certain market regime and figure out a quantitative way to categorize that by saying we're in bull quiet, bull, you know, the way I do it is bull volatile, bull quiet, neutral, bear quiet, bear volatile. And each one of those trades differently than the others. So there's something unique about each individual market regime. And when you understand that the SQN is a lagging indicator, but it does give you some good confirmation, or at least gives you a heads up of where you probably or possibly are. But it doesn't catch on as quick on the moves. And that's understanding price action is where you can really benefit from it. Okay. Boy, so hey, by the way, some ballistic missiles shot at you guys over there, or there was a big threat this week. And I don't know if it was the Houthis or, you know, by proxy Iran, but I heard you guys were on high alert. Okay, so not as okay, cool. But yeah, the Houthis, aka Iran, right? I also saw some Iranian ballistic missiles. I don't know if they're ICBMs, but there were some ballistic missiles that Iran was shipping to Venezuela at the same time that this was all going on. So interesting. Oh, I got an idea. So anyway, before I move to my idea, I want to take a look at crude based on that analysis. But yeah, you're probably in for some weakness here. We have a failed vol breakout. A move down to 18 is totally doable on silver, which, you know, is where it broke out from earlier this summer. So potential test back into that area before a move higher. Of course, we know if this gets taken out, then it's a vol breakout, and we actually rip from there. So when a failed vol breakout fails, that's a vol breakout, and so you flip to the other direction. All right. Let's do this. Maybe we can get better with crude. Nope. How did we, I think it was CL2, wasn't it? We were able to not have to see. Yeah, that was it. Okay, the reason I'm looking at this is when stuff's happening in the Middle East and oil-rich countries, this thing tends to be above a pretty strong level, but we're back into that main level. So anyway, that was a rabbit hole I wanted to go down. Okay, if there were any other names you wanted to take a look at, I'm happy to do it, or we can start doing some bar by bar, looking at how we'll figure things out at the moment and start understanding what's going to be probably what to expect in the future for, well, let's just start with the euro. So remember, we had a failed vol breakout on the monthly. On the euro, we're at that balanced area where it pretty much tends to be where things flip, not just the euro, but also the dollar. Let's get down to the week and take a look. As you can see, that level is still extremely important. 1 week up, 1 week down, where there's a whole lot of congestion here. Lower highs, now we have higher highs again, higher highs, higher lows potentially. A whole lot of congestion here on the weekly. and we had our vol breakout, pullback, attempted to do a VBO2, can't seem to do it. Understandably, we're sitting in this just tough spot, right? And currently the world thinks that we have a blue wave coming into the United States. And why this is important is because the US dollar is the world's reserve currency. So as important as, every other country would like to be, the United States being the world reserve currency, the dollar is ultimately the most important currency, and the most important time is during a political change, because that will affect fiscal and monetary policy based on who's in office, who's going to be the Fed Reserve, who's going to be the Treasury Secretary, and who's in Congress to vote down or vote in the monetary policy and the fiscal policy. So all that's kind of up in the air right now. If we have a regime, if we have a blue wave, which let's just clarify what a blue wave is, Biden victory and the House flips to Democrat majority, the Senate flips to Democratic majority. It's already, the House is already Democratic majority. So you would have the House and Senate, or Congress would be Democratic, a Democrat, their team, they would be on that party. So they would more than likely vote through everything that was of the DNC's, what they want done. The only difference being is it seems that there is a Republican majority in the Supreme Court. So upholding those would be the only balance we really have on a check and balance system with just two parties. And I think the last time we had it was a red wave, was after Clinton, in when Bush 2 was in office. I think that was the last time we really had that. So it could be interesting. And what that means is, more than likely, the MMT ideas are probably going to be a lot more accepted. And certainly all it took was COVID for people to say, yes, please give me, the week before COVID, nobody was saying anything about universal basic income and bailouts and any of that sort of stuff. Then, when COVID really kicked off in March here in the United States, that's when we had the market completely crumble, and everybody was saying, yes, please give me that. So the idea of a blue wave, now I'm not being political, I'm just saying what the market would be interpreting this as, because I'm not as versed on politics to clarify that sort of thing. I just understand how, when you have clarity on the direction of the government, the market will resolve itself accordingly. If there's still uncertainty of what a market is going to be doing, and when you don't have clarity on what monetary and fiscal policy will be, that is, the government's checkbooks, and every tool that the government has, and every tool that the Treasury has, I'm sorry, the political side has, and every tool that the Treasury has, all of that is still somewhat up in the air. If you have a Biden victory, does he keep in Mnuchin? Probably not. My guess is he would put his own Treasury secretary in there, right? If we have a Biden victory, and the thing about it is, now why I wanted to drive that point home on having a Senate controlled by Democrats, that means Congress, so the House and the Senate is controlled by the Democratic political party. So it's more than likely everything that gets proposed gets pushed through, which is not personally, I like a whole bunch of gridlock in government. I don't like efficient governments. So what happens? You get Biden in office. He starts saying who his cabinet's going to be. He's going to nominate. Probably my guess is somebody like who was not Yellen. She was the chair, Federal Reserve chairman. It was God, I forgot his name. Anyway, probably somebody similar to who was under Obama, and those sort of similar policies. So that just gets pushed through into the government very quickly. So what does that mean? They probably have, so fiscal policy becomes very different. And then you have, if he keeps in Jerome Powell, and he's just done pretty much what he needed to do, it seems. So I'm not sure if that would be as contentious or not. Flipping that part out. So monetary policy are so there. And then, so now you have monetary policy. So the House and Senate being able to push through whatever bills that, that Biden puts forward, and their own bills too. Congress approves spending basically. So that's why we have a whole bunch of indecision. That's a long way of saying this is a bunch of indecision here. Whether we think we have decision or not, based on polls or watching the news or any of that sort of stuff, is this is telling us clearly that we don't have that information yet. We don't have a clear visibility of what's going to be happening in the markets. We kind of thought we did up until July, it seems. Seems that we had everything figured out. And then the summertime, we pretty much realized that, nope, it's not a Trump victory. It was probably into June, July. It was almost a shoo-in. And then there were some things that changed everybody's mind. The summertime here was a very contentious one. And that kind of puts us in this position that we're in the moment. And as we can see, probably, using the euro was fine because it was against the dollar, but let's just look at the dollar itself. Dokes. There we go. So we have kind of this nice 94. Remember, with our failed vol breakout, we have a target in the 97 area here, which, as we can see, makes some sense because that's where a lot of, support has been historically. It's done a lot in that general area. There is a whole lot of that. So as we drop below it, it tends to move back up to it and sometimes overshoot. So the idea that we knew we were going to have a weak dollar seemed pretty obvious going into the summer, because you had, because it was pretty much given that the weak dollar, they were going to continue to print money and continue. They had stimulus bills that were probably going to happen and all these other things. And then now we have all this gridlock around the stimulus bills. We have indecision on who's actually going to win on election day. Is there, it's, if everybody is so darn obvious that it is a blue wave, why are we not taking off in one direction or the other? Why is it not there? And we've seen some very clear evidence this week saying that it's, the markets are spooked. We definitely have had a week of weakness. It was a pretty strong down day yesterday. Go back to the dollar, but a pretty strong down day yesterday, and pretty strong up week this week, 1.5% on the dollar. Again, 97 is a potential spot that we want to see. Um, 97 is a clear spot that we want to see. So that's going to be, it's going to be on everybody's radar. This election is very, very much being paid attention to. And, just like any election, you're going to have the effects of this are going to be felt for years. When one party has complete control, regardless of the party, there's a lot that can happen really, really quickly, really, really quickly. And the thing I always say is to stress test anything that goes through. And this is where something like this becomes really risky, is if they, if your person or your team they vote something through, more than likely the next election or the either 4 or 8 years from now, it's going to be in the hands of somebody else. And that's why it's always interesting when you have all of these, everybody dialed in. It's very easy to talk about right now because we've only had one president for about 4 years, 3.5 years, and it was 8 years of the prior president, and then 8 years of the prior president, and then 8 years of the prior president. So all we've seen were 8-year cycles of a president. And the last time we actually saw something was the Patriot Act really went through in 2001. I think it was 2001. And that was not just an entirely red everything, but also on the heels of 9/11. So anyway, just wanted to kind of paint the picture to why everything is so indecisive. We had everything in our favor going into the end of August. Once we pulled the plug at the end of August and went short or covered longs or hedged, we were waiting for clarity, and clarity still has not come. So we're about 2 months into the big move so that would have been like right in this area right here. It was just straight directional. And the world was thinking we were going to have a weak dollar policy. Everything was going to change. We were going to start manufacturing here in the States. And I keep talking about it, but that may not be the case. They may not be as aggressive as or they're just taking a break saying, okay, let's let this play out before we continue the move. And if, let's say it is a blue wave, it's probably not going to play out until they figure out who the Treasury Secretary is, what monetary policies are going to be done. And, so Mnuchin basically, if they don't get it done before the election, they may just wait, right? Because the blue wave Mnuchin would be out. Okay, sorry. Didn't want to get too political here, but what I wanted to focus on is that nothing has been resolved. Just when we think something is resolved, it's the opposite. And that's where we are right now. We're in unresolved territory. So let's take a look. We'll spend a little more time on currencies. And then we'll get to some other things. The strength in the pound should happen, and it would most likely happen on the heels of Brexit, than a weak dollar. So kind of vice or barring a major move in the dollar, more than likely you're looking at a Democratic victory, a blue wave for the UK is not as bullish on a Brexit situation as it would be with a continue, at least Trump staying in office. And the reason behind that is that they're basically the U.S. Democrats are really jumping into UK politics on some things that around the IRA from back in the 90s. And that would be a trade deal situation, because currently if the UK has partnership with the United States in their negotiations on Brexit, they have a fairly good negotiating. If now they don't have as many friendlies over here, based on some documents that, some letters, sharply worded letters that were sent to the UK from our house. That would be an interesting one. Okay, cool. All right. I don't know if there's anything I need to, anything else I need to cover on the bigger picture there, as far as we don't really have a whole big idea. Let's see if we can get into some tactical things. I'll let you, and rather than me having an idea of what I want to present to you, I would rather get some names shot at me, and then I will work through them so that you can, you call the shot and let's work through them together. So seeing whether we're talking about, analyzing price action or figuring out where we're going in those different ones. We know the currency play is pretty much right now, nothing's going on. There might be some odd pairs that could be at play. But I don't know them offhand. So feel free to shoot a name or a ticker or two at me. Equity, futures, currencies, crypto, all is fair here. I mean, there's a couple of trucks in my front yard. Parked across our street. I don't know what's going on. Okay. Euro yen 12 hour. Boy, that's the longest I've ever seen you, time frame I've seen you look at. Okay. Yeah. Oh, beaten up, huh? I should probably take a look at, let's start here. Okay. On the yen pairs, FYI, on the dailies, we've got some good fill vol breakout setups. This one might be a little too much. I was looking at CAD yen yesterday. I'll get to euro yen, I promise. Oh, twice, huh? Okay. Okay, we are in a neutral regime, and we have a filled vol breakout on a number of the euro pair or the yen pairs. Same thing going on the euro yen. So let's go down to the 12 hour. So as you can see, first things first, we're looking at SQN. It is in neutral regime, and it's pretty obvious that it was in bull, and then it broke down neutral, and you flip into bear regime. Let me start at the higher time frame so that we can get a good understanding of where we are for a nail a 12. I don't really have a lot to say other than it's just like the euro itself, just a little bit more aggressive. We're at that spot. Let's take a look at our, so it's weaker than the euro already. Let's drop it down to a weekly. And yeah, it's continued to show weakness. It's just a strong week down, 2 strong months down. So today being Thursday, it doesn't look like that would actually give us let's see, that'll be a long, make sure I have the long, okay. Nope. Doesn't give us a 1.5 to the midline. I don't think it's going to be any different on CAD. So let's drop it down to the requested 12 hour. We know we're in neutral. On the 12-hour, there might be reason to consider using SQN down to a 12-hour. You would take a little bit of work on your end to figure out if it's worth doing. I'm not opposed to it, but it seems to have broken. Let's get our training wheels off. Let's get to business. Okay. All right, just looking at it here. This is a bit of a balance. It's a decision point, okay? And it's, you could call it a balanced area where this area tends to be where it wants to come back to constantly and doesn't get major directional. This is where you flip into major directional moves, but this would be the mean of those moves. And so sometimes it's a very contentious area, this 122, 123 area. And I would want to take a look at, let's go back to our monthly just to make sure that we're seeing that well. And it does seem to be right in the middle of everything, right? So all the way back into the early 90s, this level is pretty much where we're at. Again, comes down to the fact that we just don't, there's a whole lot of questions going on in these markets. It's going to be an ugly month. It's a, 121 area probably is where you're looking to test, because there's some support down in there, a little micro support. Back to it. Let's go back here. Okay, so we broke down this week, Euro Yen. We know that when this one is in play, as you can see, when it broke down pretty hard. It's also doing the same thing over here, break it down pretty hard. So getting short this area, actually, this is what I mean here. So you've run stops. So longs, first group of longs that are in this September trade. So in through September, we had this. So we had a bunch of selling, couldn't sell anymore. We see this pattern. We know that that pattern is indecision. That looks a lot like what we have in the dollar right now and the euro right now on the larger time frames. Indecision here. And then a spike down. So this is my troll bottom setup that I love. You guys have seen me talk about the troll bottom setup a little bit. Is you're going to have people who have their stops right here, right? So they're just going to place their stop a couple of ticks below that one because that's the last bottom. And they're going to try to catch a reversal here. And it holds, it holds, it holds. You start feeling confident about your life and you finally understand what's going on. And, you're no longer the awkward kid in school. And then all of a sudden, somebody comes up and punches you in the gut when you're walking down the hallway. That's what happens here. And then they just walk off. And you're like, who was that? I don't know. Does he go to this school? No, he didn't go to our school. All right, anyway. But this is my troll bottom setup. It's a good bottom. It just spikes below. And then so what I want to do is, I know that that's going to mean that longs who are stronger handed, confident about all this, getting stronger handed each time that's attempted, suddenly lost faith in what they were dealing with and they cover. And we know that's great because now we have bears who would have been with their stops right here, every time it comes up, bears are feeling pretty confident. And then the troll bottom happens. Bears oftentimes will put a sell stop below here, even if they're already short here, but they're already there. So they're selling more here. Bulls are also selling because their position goes weak. And then the market can then reverse with all these people on the side lanes. And so now they have left. So your shorts got stopped or added to their position and now starting to feel the pain. And they're going to get stopped out here, which is going to give these big candle bars. And then our longs are feeling pretty confident. We put our stop below that, swing low. They're feeling pretty confident until all of a sudden it breaks and they're saying, okay, well, that's a lower low. According to the book that I read on markets, if you have a lower high and a lower low, then the market's going lower. So I need to cover my position. I need to sell out of my position because it's going down. That's my troll bottom. It trolls out the longs and convinces the short, the game's on. Shorts add to their position on a break below there, and then it reverses. Shorts have their stops up here, and so they're going to get stopped out. Bulls are going to add to their position because we just broke above this level in the opposite situation of that troll bottom. And so you're going to get bears stopping, buying to cover, and bulls buying to get into the position. And it's going to run a good amount. And then we get the more trolling because now bears are going to see moves like this and they're going to want to get back in saying, okay, yeah, we up, down, lower, high, put a sell stop here, low, boom. And again, they get stopped out and they get stopped out. And then bears can finally come back and start causing some pain. Bulls say not so much. Bears say, no, we're really in charge. Bulls say, yeah, no, we're really in charge. We're really in charge. We're really in charge. See, I told you. Wait. So now you have this entire range. Not what I say. Sorry. I'm talking about the bulls, not me saying wait, but the bulls are like, yeah, no, we're really in charge. See, I told you. Inside bar. Wait a minute. If it's really as strong as it was over here that I was believing it was, and that from this, because I remember how fun the summer was, it was just fun to be long and everybody got their face ripped on the short side. I want to be long. Wait, why am I not? Why do we have an inside bar on a spike up power reversal type pattern on a pullback at around the 50% area? This thing should be, according to, Fibonacci Trading 101, who probably most everybody thinks is really important. They're thinking, okay, yeah, cool. It pulled back, breakout, extend, pull back, and then we're off to a 138.2 extension. And all of a sudden you have an inside candle. So an inside candle, you're questioning your decisions here, but you're still long and you're at about break even. You're feeling okay. And then when that one breaks down, another attempt to bring it back, it can't seem to do it either. And it closes below this low. Now bears are in control. And bears start dumping and dumping. And so when this one breaks, you have a big candle. When this one breaks, you have a big candle. When this one breaks, you should have this was the biggest one to deal with because it was a multiple complex bottom. And finally, when this one broke, here, you trolled it, right? So you had that sell off, you broke this line here, and then you had a sell off that gets bought, another troll type bottom. You feel like another troll bottom is happening. And so you're feeling pretty good about yourself. It opens down here and then takes off running, and you're thinking, perfect. This thing's heading back up into here, and we're going to, get a trade to the midline. Life's good. And it turns and closes on its low. That right there, this at 5 a.m., at 2 p.m. Is that right? Yeah. Okay. At 2 p.m. yesterday would have been the opportunity to say, yep. So we're closed below this swing low. We closed down near the bottom of that. We basically reversed and continued the same direction. So a nice buy sell setup just got negated. So that should tell us that we're bearish, and now we're dumping. So all well and good. And what we've seen, if nothing else, is that we've seen every time we see something saying, hey, it's super bullish or super bearish, tends to get reversed. Remember, we are in a neutral regime. So what works in neutral regimes are failed vol breakouts. And then of course, let me find out what our percentages are on in neutral regime in a euro yen. It's not that great. Failed vol breakouts on the euro yen. We get a lot of trades. It's got a 66% win rate and a 1.9 SQN. In a sideways volatile is a 57% win rate, but a 2.95 SQN. So it's not really a good one to be looking at trading failed vol breakouts. You guys couldn't see that spreadsheet, but that's the data I have on that. A better one to trade would be the pound yen in a neutral regime on a failed vol breakout. Cool. What do I think is going to be happening from here? Is it more of a move to an extending the trend move, or are we looking at a reversal here? So this could be a bull flag, a major market top. You know, this would be a head and shoulder inverted head and shoulders. Breakdown there. We have a low base that broke. A lot of indecision going on this one is ultimately what we're talking about here. I don't really have much more on that. I know that was a good chunk of time drilling down on that, but hopefully it was useful. Let's take a look at Cisco. And we can use the microphone, so feel free to use the mic if you have something you want to go over. We are in bear quiet on Cisco weekly you wanted to look at. But let's start with getting our SQN. We're in bear quiet on Cisco. So the thing about it is that is not shortable. It's just not buyable. Let's go to our weekly as requested. Major trend broke. And all that that's not something I really, other than the fact that people actually pay attention to that. You know, I loosely threw this trend line up there. Of course, you know, Raoul Paul would do better at drawing a trend line and then doing a tweet that would be very bullish or bearish. And Raoul and his crew, I should say. Let's look at, I mean, obviously this thing's just goes straight up over the last 50 years. Are we log? We are log, aren't we? Okay. So what you'll notice is this looks a lot like, again, these look a lot like Bitcoin. And so this would have been our 2009, maybe. We're either here or here on Bitcoin if we're using this as an analog. Anyway, all right. Global financial crisis, major top was here. So the 2008, 2007, 2008 top was right here. We're pretty close to that. And to me, that would see, we reversed it we obviously hit it in, everything happened in March. Are they paying dividends? I didn't think so. 12 November 20th. Okay. So we've got a couple of weeks for them to report earnings. My position here is I would be interested in seeing positive price action at the 34 level, which would be 2017 high, 3460, 3453, and then the global fund at 3424. So the 34 area on Cisco would be interesting to me to be watching. It's going there. It doesn't have to actually hit 34, but if it blasts through or does something, I think that's going to be an interesting location to be paying attention to if you're interested in getting long. I'm going to take this ridiculous trend line off. Trend lines as such are pretty ridiculous is my point. You're in bear quiet, so we would expect it to go down. We have that head and shoulders. Yeah, I don't really have I don't have any conviction in either direction, but if I wanted to own it, owning it down at the 34 area would be a place that I would be interested in it. I don't short stocks, especially big leaders like you know, as far as I know, the biggest leader in networks. You know, the big, I don't think anybody's bigger than Cisco, but I haven't done networking for a number of years. I just know that they've been the biggest, obviously with other technologies coming around. You know, they can leave. Okay. Did that answer it, Louis and Chris? Feel free to follow up. I got another question on deck here. And feel free to jump on the mic if there was something specifically that you were interested in about that analysis that I didn't cover for you. So Louis says, that's good. Okay. I really want to practice my Arabic with you, buddy. But shway, shway. Okay. I used to do a lot better. I was obviously living there for so long. I picked up the language pretty well, but I haven't really spoken it much since. So I don't know. Enta al. I don't even know. I don't even know what I would ask that. How are you? And that's about it. Okay, sorry, I'll stop. Okay, Dan, Chris, how to use multiple timeframes when analyzing a trade? What are you looking for in each time frame? So I always want to start at the highest time frame because that gives me what's significant, where significant levels are. Okay, so if you're far away from a significant level, let's take a look at Cisco here. Historically, this has been a range that we broke out of, and you know there was the overcorrection here of the .com bubble, and then 9/11, and so this was 9/11, and then the recession, and then the rally recovery, and then the move up to the global financial crisis, and then Cisco just becoming more of a commodity, and then they got some good things going on in their life and made another attempt at a new high. Now, what's interesting about this is if I'm going to do this and look at the NASDAQ itself, the index that it trades, this is that same high that Cisco's here, $74 relative to the NASDAQ 2000, or I'm sorry, NASDAQ 5,000 high in the year 2000. So Cisco, this is the exact same time frame chart. The NASDAQ has done this. It's gone completely parabolic, while Cisco is still, relative to the high, is still at what, 70, whereas the NASDAQ was trading at 100, so almost half. Okay, so I always want to start at a far time frame when I'm analyzing something, so that I have context to what I'm looking at. If the price is trading at 35 and it broke out of this 34 range to get to this level, that leads me to believe that this 34 level is a magnet. it wants to be tested. I'm not saying that it will be tested, but shorting it here would say, okay, I have a small target to where a lot of strength is probably going to come in. There's a lot of buyers who are just conditioned to know that 34 was a, you know, where it broke out, and that's where their stops are at. So this 34 level is significant to me. So that's on a monthly basis. That's a multi-decade basis. I can see how significant. And one thing I want to point out is we have, outside of the indexes themselves, on a number of assets, we are at multi-decade balanced areas, right about an area that broke out that wants to get retested. And so what we have going for us is that we realize that not just in the currencies, but in equities, in a lot of places, we find ourselves in a position to where there's a lot of indecision. And so if you're trading for a lifetime, September and October and November of 2020 are very insignificant times to be, relative to a 20-year or a 40-year trading career. A couple of months around an election are not that difficult to, not trade. It's easy for me to say, but it is easy for me to not be trading because I know that there's, of the other 19 years and maybe 8 or 9 months of my life, and probably the other 19 years total with elections and all the other stuff of generations past, 19 years of good trading, high probability expectations is available. It's not really that. Right now, it's very high risk. There's just not a lot going on. You have the best trading setups in the world failing, and then the fail of the fail fails. And so it's, really not, it's not good trading at the moment for a lot of reasons. There's a good gambling going on, but not a lot of good trading. Okay. What else you guys want to look at? Did I answer the question? Sorry. Let me finish the question here. So multiple time frames. If I'm only trading for a 401k and my time horizon is like 5 or 10 years, then I'll be making decisions on weeklies and monthly charts. If I'm trading for daily and weekly income, like I like to trade a lot of my systems, the only reason I'm looking at a monthly or a weekly is to get context around where we are and where a good potential is at. So if I know that 34 is a pretty, 34.50 or so is a pretty good likelihood, then now I can start thinking to myself, okay, I want to find a reason to get short on shorter time frames. Right now we're in a downward trend, so on an hourly. So what would I want to see? Probably I want to start seeing, I want to see a pullback that fails. Because I know that trading, if we're trading at 35.90, 34.50 or so is going to be probably pretty enticing to the knowing that the market wants to go there. So I'm going to want to find opportunities to get short it so that I can do that. So at the moment, I don't really have any on any time frame. So I can say, because if you have like $1 or $1.50 target to where it's a magnet to your price and most likely going to get there, then the only, and we're talking about a stock that, went from, 60 down to 35 in about a year. $1 is not that much. So that's knowing that this area right in here is fairly possible. And actually, one other thing I noticed is this gap, when it blasted through that, it did it on an earnings win, probably in November 2017. It looks like they had an earnings win and it gapped and just went from there. So what I know is we have another earnings announcement. So now we have some sort of catalyst that'll be November 12th. We have some sort of catalyst that would potentially move us to this 34 area, or Heisman it, that is just reverse and go another way. Okay, so to follow up, Dan asks, so retirement accounts, you put the most weight into weekly and monthly charts, but for income-based trading, you rely on daily timeframes and lower. What is the lowest time frame you'll look at in your trading? Yeah, 5 minutes, sometimes 3 minutes. When I'm trading currency system, the early morning currency system, I'll trade 3 minute chart when I have the ability to be that focused. But we're talking, I'm trading. I'm not, I'm just in and out. I'm looking to grab 1 hour profit, exit, 1 hour profit, exit, 1 hour profit, done for the day. That can happen in 30 or 60 minutes. So contextualizing each different thing. So, and trading my scalping system on the 3 minute chart, I use a 4 hour, a 1 hour, 15, either 10, 15 or 20 minute chart, sometimes even a 30, and then the lowest time frame. So whether it's 5 or 3 minutes. And what I'm looking for is alignment in direction on 4 hour, either the daily 4 hour, 1 hour, on multiple time frame, on about 3/4 of the time frames minus the low time frame. So let me just try to set up a layout for it real quick. Okay, we'll do, I don't want to do that. Never mind. So on retirement accounts, assuming, or let's call them long-term position accounts, yeah, you don't need to really worry too much about anything, definitely nothing less than a daily chart. I will rely on monthly, weeklies, and dailies on my long-term account. And oftentimes just on the monthly chart. So for my my macro ETF strategy, that trades exclusively off of a monthly chart, so it doesn't drop to lower timeframes. What else, guys? And yes, Chris, I love trading the 12-hour myself. Nothing else, huh? Let's see what we got on failed vol breakouts, because we do have failed vol breakouts on the yen pairs. So let's get those dialed up and have a look, see if what we have showing up today. Aussie yen, remove drawings. Aussie yen, this one actually has neutral. Let's go to, I'll tell you the best ones to trade in neutral regime on a failed vol breakout for the yen pairs. The only one, the pound yen, Aussie yen, pound yen, CAD yen, potentially Kiwi yen, all are pretty good to trade on the failed vol breakout neutral regimes. So we would say Aussie, we would say pound, and we would do So Aussie yen potential setup there today. Pound yen, no setup. Kiwi yen, no setup. CAD yen, too far away. So, because we did that one together. So let's have a look at what Aussie yen might give us. Yep, that gives us about 1.5 perfectly. So we have a fail vol breakout. We're going to have a fail vol breakout today on the Aussie yen long. Let me give you the expected returns on that. So sideways volatile, that's a 72% win rate with a 5.4 SQN and a 50% win rate in a sideways quiet with a negative return. So this is sideways neutral. So right now, sideways neutral is the weakest setup. The only setup. But anyway, any other questions on that? Is your Forex trading all done with the 8 majors? Yes. Is that 8? Yeah. So I do euro, pound, dollar, CAD, yen, Kiwi, Aussie. Did I say yen? Yep. Those. I don't, on trading, I don't do peso, ruble, krona, dollar, pesos, reals. I don't do any of those. Just stick with the major ones. Not to say they don't work. It's just that you find that the carry on a lot of them, the fees to trade them are so big. So they have to be like major macro type target moves that you would be taking them, and not shorter term 1 to 3 day trades. So we do have a potential Aussie yen failed vol breakout long. I'll be putting that trade on tonight. All right. How do I gauge liquidity with big Forex pairs? Let me think. So I look at the spread. That's what's important to me, is if the spread is very big on a pair, I'll not take them oftentimes. Or is it as simple as looking at the bid ask width? That's what I do. Yeah, because you don't actually see the dollar volume of a currency pair. So one thing we want to know is, like, let me show you this. Okay. So you have FXCM, Oanda, Forex, ICE, Saxo, Currency.com, Kraken, and iBroker. Each one of those is its own exchange. So there's no central volume. Some of them try to give you an idea of the central volume, but pretty much what you have to do is figure out, okay, which one has the most traders on it, and then use that for volume. But I don't use volume on FX. And you can do it on short time frames, day trading, and it works a bit, but the real volume is not done on these day trading exchanges of FX. The real volume is done when hedge fund trader at $5 billion firm is told he needs to go and get 800 million euros so that they can put on another position, or they need $1 billion in yen. We don't see that stuff as traders. That doesn't show up as a print on a chart. And that's why FX is FX is trillions of dollars, because literally you're just exchanging the biggest currencies in the world for each other to do commerce. We just like to trade it. So some of the currency pairs don't trade during other sessions all that much. Everything basically trades during the US session, but Asian currencies have some sort of, you know, they have some Asian and the Pacific region currencies have a little bit more stuff going on in the evening in the United States time, but not a lot. There's still more volume and more activity happened during the US and the European session. So what do we got? Anything else, guys? Should Euro USD fail vol breakout step on monthly and possibly fail vol breakout on daily time frame are suggesting direction. EUR USD. So we don't have a fail vol breakout yet on the daily, but we do definitely on the monthly. It is suggesting different direction. Got it. Yeah, it is. Daily is, or the monthly is going to take, so that would take anywhere from like 1 to 5 months to play out. Because typically a fail vol breakout is 1 to 5 on a daily chart. It's 1 to 5 days is average. Same thing applies for monthlies, 1 to 5 months for that thing to play out. So the intraday side is you're going to, you know, at the end of a month or the end of, you know, the year, you'll see that maybe the fail vol breakout start playing out. Maybe you do see the one, you know, the 115, or maybe you're seeing the 117, because it still takes time for it to actually hit the target. So a daily absolutely can contradict the monthly. What we have with, so it's an excellent point. This line is from the daily or the monthly chart, and we see we're at that major line. And so there's a, let me shut my window. Hold on. Neighbors blowing their leaf blowers, blowing their lawn. So we don't have a fail vol breakout yet on the daily here. One thing we could look at though is we could see, okay, we're in bull quiet, so it would suggest that we are going to get a long potential, and that could, you know, tomorrow have an inside bar, get long Sunday or Monday, and then write it up to our 1.2 our profit. But we could also get ourselves a vol breakout, and this suddenly this line is significant and it breaks because we're trying it again. But good point. Good point, Should. There's a whole bunch of incongruent information. This is we're currently at a point where everything is just totally indecisive. So as you see, the monthly is short. We're getting a potential fail vol breakout long on the daily. It's not there yet, but potential one. And if that happens, then we got you know, a lot of indecision. We know we're at indecision levels. And yeah, there you go. Any other questions? Let's get fail vol breakout upside on NQ hourly. Good reversal from the lows yesterday. We know we're in potentially a bull quiet regime on NASDAQ. So this level that we were buying at here on the NASDAQ the last month or so has held so far. So I'm only one trade, 1, 2, 3 longs here, followed by a fourth, which one was it? Here last week I added and then took a face ripper. But these positions are basically holding. This price level is basically holding on the NASDAQ. So that's an interesting one. All right, guys, I think that's it. Doesn't seem that we got any more questions. I'm happy to answer them, but I also want to let you guys get on with your day. So feel free to post it in here. If not, I'm gonna go ahead and step away. All right, Loe. All right, guys, that's it.